Good morning. Today is Thursday, May the 19th, and this is the morning report. We did get a couple of things in the early part of the morning that are sort of jockeying price actions around. We had jobless claims that were a little bit higher than we expected, and I did not read the Philly Fed. It says negative 1.8. The consensus was 3, so that, of course, is a little bit negative. And then, of course, there's the story of the disappeared airliner. And so it's got things looking a little squeamish, but they were looking squeamish beforehand, as we know. For those of you that are members, you might see that from the intraday trading sheets that are up now, and I do hope I did that. Let me, yes, I believe that's taken care of. Yes, you'll see that I have some commentary about where key support and resistance zones are in terms of making the trade for these other stocks that we don't particularly watch day in, day out through the trading room event. All right, so let's take a look at the ES. We know what we need to do here. Big deal watching this level. Of course, if you and I can see it, so can everyone else. And so what they are doing is struggling desperately to hold a support line right here. So my thought is the following. A deep spike down will still bring buyers into the mix. That being said, intraday, a deep spike down can be traded quite nicely. So what we are looking for now is the failed bounce that manages all this negative rotation that we are seeing right here, realizing that shorting the base would be a pretty bad idea here, unless you are quite ready to take profit as it drifts into what I think is a very, very important level around 2027. It's been sitting on the blog for quite a while. So we're going to be watching that. We have negative slope, we have negative momentum. That gives us bounces that are going to get sold. And so we're going to look at the very important region that we've been staring down, the 2030, 850 to 2040. That's going to give us the shorting event to give us the least risk and the highest impact. The more we knock on this door here on the baseline, the more likely it is that momentum is going to show the way forward. Right now, we seem to be just really trying to lift the region. We've got technical divergence, positive technical divergence on the 15-minute. I've got a freeze going on. I'm terribly cold if you hear a little shimmer in my voice. It's because I'm freezing. But with this higher low here, we've got some positive divergence from a very tight time frame on a 15, but it's not showing up on the hourly, and that means the retrace is likely. That means noise around this baseline is likely. So as you come into this level, don't immediately think that it's going to fade. The bounce into resistance is going to give you the fade until the 1 hour momentum starts the lift, and then that's going to give us the rise, of course, into the 2040, 350 area. We're going to start watching how we behave at 2041 is going to be fairly important. Markets seem very stalled to me. We obviously see this negative space, but a clear line of buyers that come in and pick it up off these value areas, they're just not allowing the chart to collapse, even as we run into the depths like this. Now, here's the thing. The longer this runs downward like this, with this kind of behavior, the more likely it is that we do collapse and come down into this 2019 and then maybe even 2006. But this is a daily marker, and I have no idea how long that's going to take. On top of that, the monthly price action is still bullish formationally, and from a weekly perspective, we're also bullish. We just have started losing these very tight moving averages, and you know that is a problem. Things are starting to look a bit more negative. So we're going to be in better shape if we can get up above 2053. As long as we sit below that region, we are going to be very susceptible to sellers coming in and driving us lower. All right, so the levels to watch here, 2033 on the bounce from the first pass. Then we want to see the 2038 to 2040 as first line resistance, and the longer we chop around here, the more likely it is that we may change. But if we continue with negative momentum like this, our bounces are going to get sold all day long. No recovery here in the mix. For the NQ, you know, I did notice a number of charts lifting when we saw the market drifting down, and you can see that the formation here, let's take a look at this, back here at the ES, right? Look at the ES formation. It's got a little bit more negative drift. Here's mainline congestion at this 2043 area. With the NQ, we're not quite seeing that at all. What we are seeing is something that is much more stable. It's still sitting right in the middle of all of its congestion measures. And so we continue to look at the 4,300 area as a primary support zone. What are we doing today? Well, we're right up over a region that normally has support, but we had an opening tick almost right at the resistance zone, right here, and we faded into this sideways formation. Momentum is flat to slightly up, tells me that we've got range-bound action here, but it also says that, hey, listen, my bounces, they're probably likely to get sold. That being said, the hourly chart is showing positive divergence. In the ES, we're not seeing that. We're seeing that here, this positive lift in the space, and so we've got to watch these edges to see what happens. To me, this makes this chart very, very messy. What I can assume is because it's messy, I can trade the edges of the ranges with my eyeball set on a shift in momentum. So what does that mean? That means if I come into this region, I can anticipate that somewhere around here, buyers are going to show up. And so I don't want to short here unless I'm planning on getting out in 3 points or less. Maybe it ends up being more because we've got negative support, but the stretches here are going to stretch that elastic band so that we end up with a wick rather than a candlestick body sitting in the range. And so here we've got this region that we're looking at, 4309, because we have negative momentum. We don't want to take the long sitting at the area. We want to telegraph down into a very tight time frame, and we want to start looking for where the price action looks like it's getting stabilized. Right here in the space. It'll be sideways, momentum will shift, so on and so forth. That's really what we need to look at from this perspective if it dips down into this area. Ideally, because we're sitting underneath a number of these moving averages, and we're sitting under a number of these moving averages here on the hourly as well, we want to anticipate that bounces are going to get sold, but at the same time, because we see this positive divergence in the mix, if we come into this region and we start looking to stage a short, we've got to telegraph into these tighter time frames to tell us what is going on, because easily this positive divergence could help us expand right into the top of the range and give us another move that will collapse. What's the bottom line? Edges are going to make the best trades. Big spikes up, going to get sold. Big spikes down, going to get bought. Inside of the middle, it's going to be a crapshoot. Let's take a look at oil. All right, so we've been talking about oil in this very, very interesting space. We saw negative divergence setting up, price action not losing the edge until we drifted down after Fed meeting releases, right? The chart really started drifting down. This is the Fed speak. That's the time that it began. So if we take a look at that 15-minute chart and we watch it, look at the setup here. We know we've got weight. We know we've got some technical divergence. So all we need to do is watch for the collapse of the price level. We've been looking at this. If you take a look at the blog, that open morning post, it said the short, ideally, was going to be at the failed retest of 49.20. Here's what it did the whole time. Came into the 49.20, 49.30, bounced all day long, and then finally it gave way. Now, 15-minute chart shows no technical divergence per se, particularly on the slow SMI, but here on the hourly, we see some motion that is extremely important. And so that gives us that breakdown. We lose the opening tick. We know the ability to short sits in there, and that's brought us into this key support zone that we're looking at. I tweeted this morning, hey, listen, we've got price action, buying action that's stabilizing around 47.75. If you take a look at the morning blog post, I said the long was either here or here, right here off of the bounce. I think I may have said 47.43, but something like that, coming right into this area. It did exactly that, collapsed into support and moved up. Listen, what do we suspect? We're in a very bullish chart. A lot of speak out there right now. I think a Kuwaiti guy said something like, ultimately between now and several months ago, we're more than 3 million barrels offline of the numbers that we were. And so we are really seeing a shift back into the space. The API showed a draw. The EIA showed a build. Who knows what's going on with that? Suffice to say, we are in a very bullish environment with buyers coming into the pass right here around this region. Very, very nice price action. I am long from this area, looking for that 48.10 space as a premium target, but 48, notice, because of these wicks right here, 48 was one of my first targets for myself. Now looking between 48.10 and 48.20. Only quarter size exposed at this juncture because I am sitting here in the middle of the room sharing all of this time with us together. What is it likely that we test? Well, it's likely that we test this overhead congestion up here. Look at momentum. It's negative with the slow SMI far away from the fast SMI, and both of these lines are sitting well above the zero areas, so there is bullish momentum that has told us, listen, when you see a dip like this and you've got big moving averages, all it tells you it's doing is coming into support. I know I sound like a broken record, folks, for those of you that are here with me every day, but we've just got to get this powered into our heads so that we understand how to read momentum indicators. A lot of us do not read them relative to motion. You can't just look at them and go, oh, that's fading. You can't. It's relative to motion. So it's telling us it's pulling into support. That's why we've got the buy zones here. I have not changed the levels. They are the same in the blog. So I haven't adjusted any of these levels from last week. They remain the same. And so now we are looking up at the potential test of resistance. What do we anticipate? We anticipate that we test the prior day's low or the opening tick, right? And then, you know, it's up for grabs again. It really is. If somehow we can't get past this 48.10, we're going to double up right here, as we should. Look at this formation. This formation tells us this bounce is going to fade. That's why I'm not sitting here forever. There's no way I'm sitting here forever, because this formation tells me the bounce is going to fade and I'm likely to come back. I'm still with lots of negative trending territory, so my bounces into resistance are going to be shorting events, right? So I'm looking to close this position out and reinitiate a short to pull me back down into the region. Hopefully that does the cycle it's supposed to have and then comes back down, but you know, you never know. You don't. You never know. At any time, no matter how much analysis you do, things could go awry. This is an S-curve test. It's being tested right now. The failure of it brings us back down into the base. And my stop is, of course, at this juncture, still in the green if I should get stopped out. All right. Let's take a look at the euro. Fed speak yesterday did the whammy on both the euro and gold. We are going to be looking at that. I expected the euro to try to hold our 112.25 area. It only did that for about 12 hours, maybe 16, and then fell right off a cliff coming into this next line. I think this is a little bit shy of the real support zone, and we've got tons of negative slope. Guess what? Bounces are going to get sold. They're going to get sold. What does this mean? If you're looking at negative momentum and negative trend across the board, why not just take the breakdown? Well, you could, but then you'd open yourself to all kinds of risk, and risk management is the name of the game, right? If you have a lot of money, or you have any money that's in the market, you should be completely focused on risk management, and I think it's probably one of the weakest strengths that the average trader has is the risk management event, and it's the strongest strength the most successful traders have. It's managing the risk. So here's what we're looking at. This potential bounce, of course, cycling back up into the opening tick, the prior day's low. I don't even think it'll get to the prior day's low, frankly. But it could. If it does get into that space, it's very likely to resist and fade. Listen, if the Fed speak continues on raising the interest rates, it's going to strengthen the dollar, which runs inversely to the euro. That's going to mean downside momentum. All right. This is the daily 200 simple moving average, and it's sitting below here as something fairly important for us to watch. All right. So we've watched the resistance levels to open up the short. If we sort of fade from the 1.11220 area and you pull back, support action should bring you into here and potentially lower, but the slope of momentum seems very, very negative. So bounce action is going to be a great place to short. Seems to be the order of the day today, feeling like the bounce is going to be at the short zone. Take a look at these great levels. Again, you know, I haven't changed these levels in months. Big support zone here in gold. Gold runs inversely to the dollar, right? If we raise interest rates, it's going to boost the strength. That's going to make gold drift down. Now, here's why this is particularly ugly. If you watch Bloomberg and other things like that, all they've been talking about last couple of days until, you know, today or so, they've really been talking about people just packing into a long gold position. We've been talking about this being a little bit uncertain in terms of what's going on here, and the better bets are going to be to wait for the deep support structures to watch for the bounce. Here's the thing. if the Fed does raise rates, this thing's not going to do anything but bounce into resistance and fade one more time. I think the bounce in gold is extremely big and it needs a retrace. It's very hyperextended from its moving averages, and so I still think bounces here are now going to fade if we can't get back up over 1265. If we get back up over 1265, the chart is going to grind around this area. We know 1286 is a pretty big number. We've got a low, a high, a higher low, a higher high, another higher low. That tells me I could have upside projection. Momentum tells me my pullbacks are still going to be bought in this formation. There's a lot of buying power sitting underneath here. People are going to try and buy this up. My thought, potentially, is that we fade one more time and we drift into deeper support. The deeper your support action is, the more likely it is you'll be able to recover something on the bounce. Okay, so don't get anxious about getting involved in gold at this juncture. Though it has a lot of upside momentum, it's still telling me that my bounces are going to get sold. Where's that going to be? Hey, 1251 looks like a really good sell point right here. It could be shallow at 1248. What do you need to do from those spaces? Go to that hourly chart and see where those moving averages are setting up. Look at this. That's horrible. That looks like shallow bounce before a deeper move downward. And the Globex fib gives us 1240 as a potential test today. Watch for the bounce to give us another short. All right, let's take a look at SPY. It's the only ETF that we do look at. I do have those levels sitting in there. SPY. This is a bunch of pickup sticks. All right. So, and it does look a bit like the broad market, of course. Little weak bounces, still going to get sold. Now, ton of overhead resistance sitting here. We did talk about this a couple of days ago. Said, hey, listen, if we lose this level, we've just crashed through all kinds of buyers that have been sitting in this zone. And the key event now is going to be the failed test of 204.70. That being said, take a look at the bigger picture. The bigger picture shows that every time we come into this 203.80, we bounce, right? And we've bounced literally every time we've done it over the last however many weeks that is. We're sitting in a space where we should try to bounce again, but now we are sitting underneath some moving averages that are fairly important, and our charts are starting to look very heavy. They're very, very heavy. And this concerns me a lot. Okay? This concerns me a lot. Should we do what it is that's anticipated? Yes. But if we see this kind of momentum, that's negative momentum, right? And we're underneath the moving averages. We should expect that the bounce action we're in the middle of right now, which is very minor, should fade. But it should fade into a wicky area that tries to push up. So again, not a good place to short the low. Very bad. Very bad unless you're ready to get out in 20 cents. Or you're willing to expose yourself to all kinds of risk as it bounces into resistance. Key resistance area is going to be the 204.90 to 205.30 area. If we get very, very weak today and we lose our 204, it is likely that we can take the short below that 204 level. Our tight time frames say that as we come in, we are going to find buyers sitting at the prior day's low. So you want to watch that very, very carefully. I think that is very messy to trade without the right leverage, right? I don't really see great leverage there at all. All right, taking a look at Apple, we've got the Apple setup sitting in here. We talked about this bounce event. You know, somebody had said, hey, listen, I want to short it at 94.06. And I said, well, If you do that, you better watch 93.55 as a region for the chart to hold. Now, it did come into 93.07, but it's bouncing, and it's bouncing into a double top action on the 4-hour event that's got drifting momentum. So your breakouts are not going to be buy zones. They're going to look like something like this, right? The big expansion is actually going to be an area to short coming into a deeper level, a higher level of support. So what's the look here, right? We've got about 95.60 to 95.80 as resistance. We've got 93.50 to 92.80 as support. Those edges are going to give us nice buying opportunities. Outside of that, going to be nothing but rolling dice, okay? And we don't really like to do that. It's not a good thing to do because that means, you know, you really are gambling. And we really do try very hard to stack things in our favor probabilistically before we make a move. Intraday trading report has all that setup listed right in there for you from the space. Netflix, another one working fairly solidly off this range. Watch this, right? Super tight. We talked about these deep pullbacks being buy zones. Why? Yeah, because they're buy zones in the past. So if they're going to be buy zones in the past, yeah, well, if they're buy zones in the past, they're going to be buy zones in the future. Doesn't mean they're going to hold. So you're going to watch for the first pass, as we have, bouncing up into frontline resistance. Now you could draw a trend line there, but trend lines don't make good trading spaces. Congestion makes good trading spaces, and we're looking at congestion anywhere from 91 to, you know, 92.20, right? And so for me as a trader looking at this chart, I firmly believe that we have a formation that has quite a bit of negative drift, but only into the moving averages and potentially higher support. So what do we look for here? A pullback that ought to create a buy zone. You know, that could be anywhere from 89 to 88.50 as an ideal space where buyers should come into the rescue. If you do that, if you wait for that and it comes in and then it can't get up over 90 or 90.60, you know that we've got a problem, right? So if you take the long on the dip, watch for the lower high to tell you that the chart is coming into intraday resistance and it's a space to look to take your trade off and reset one more time again. If the chart happens to breach this congestion line, it's pretty big, 91.62, the big bounce upward is still going to give us a sell zone, and that is anywhere between 92.27 and 93.35. Now, if it gets up there and pulls back and starts holding the 91.70, going to be in good shape. Tesla. Oh, there's so much to say about this. Mostly it's about Goldman, but not going to discuss that at this juncture. Probably the wrong place since I am being broadcast live. I'll talk to you guys about that later. So here's what we're seeing. Sideways action. We know that Tesla was sort of building a base. We had talked about this. Any steep pullbacks, even though they look bad, they're going to give us potential bounce zones because we've had that in the past. Here's the thing. Formationally, we've got a couple of things that are sort of moving against the chart. Here we have the opening bell. If we do this and pull back into the region, we're going to see that this chart is in a space where a natural retreat off of the spike is likely, but that same retreat ought to give us a buy zone. And where is that? 209 to 209 to maybe 207.90, 208.20, something like that. Now, we've got a lot of new shares entering the market, but this should normally give a market dilution event, except for the fact that Goldman upgraded the stock while managing the equity raise. Go figure. So what we are looking for is the chart to actually hold these regions even as points about the new shares are going to be entering the market. Look at the momentum here. This tells me that my big spikes should get sold. But I've got a gigantic elevator shaft between 216 and maybe 222. And so the big expansion could actually be traded, but this is not a space to hold this chart for now. It needs to double bottom or pull back after a spike and give us a higher low so that we advance. Who knows what's going to happen with Tesla today? My thought is pullbacks, going to make fairly solid buy zones. If you're looking for the pullback space, you check that hourly chart and you look for the deepest moving averages that you can for your ideal entry point. And then maybe you suggest that you might be able to take it off the 10, but fading fairly likely here. Let's take a look at Baidu. Hello. Baidu has a support bounce here. This is a natural region of support. The problem is it's got quite a drift, and it's moved through a beautiful trade that we've been able to participate in for us that have been working those silver and gold portfolios. It ran right up into our target space. Well, it was about 10 pennies shy of our final target, but a very, very nice run from 160 all the way up to 171. And now it's time for that chart to take a breath. It is. However, it's coming into all these moving averages that are upside, so people are going to try to take that bounce. I'd look for the double top or the range expansion event to short this one, potentially into a higher low. Pullbacks, of course, naturally bought 167.50, an ideal place to stage that long. We have slope, but location is a problem. So I suspect we really end up drifting into 165 to 164 before trying it again, and then we have a whole brand new setup there. All right, where do I think the chart is going to actually hold traction? It is above that 169 area, but we do have to watch for sellers showing up at 171.40 to 172.90, as I believe taking the bounce here will be a little bit early in the grand scheme of things. The big rotation says it's got a deeper move down before it moves back up. All right, taking a look at the IYR, big zone, check it out. What's likely here? Look at slope. Look at the slope of momentum. It is absolutely horrible, right? All the bounces are going to get sold today. Here's my thought. This area here has been a primary bounce zone, anywhere between 75.80 and 75.60 in the chart. If we take a look at it on the daily, we're seeing those exact numbers, right? Somewhere around that 75.60, 75.80, buyers trying to step into the mix. I suspect that they will show up there as well. The problem is, how much juice do they have to bounce? My guess is, because of the slope of the price action event, then my bounces will be shallow and I'll have more downside to look at into frontline support. So I can watch for the bounce, anticipate the failed bounce will take me into these other support areas, but then when it comes into these zones, really going to have to start managing it tightly. Everything here really, really pointing to the failed motion southward in the chart. Could you take it right this minute short? You could, but then you're completely eliminating the information that says, hey, last time we came in here, we had a whole bunch of buyers, and they started buying up the chart, and forced it into this region. Here, we have momentum that's a little bit shifted to the north on the SMI, but still very negative to the south on the MACD, which is the most sensitive of the two. They could just be forcing this envelope and trying to run folks in the other direction in a little bit of a bear trap before it bounces and then fades. Lastly, let's take a look at Facebook. Facebook, another great trade for us that we finished out several days ago, right at the collapse zone. What I say, hey, listen, we need to look at this 116.80-ish area for the bounce. If we can't bounce here, we've got some trouble, right? This is a market auctioning event that is very thin, right? And as we know, it is not only nature that abhors a vacuum, it is the market. And the market auction theory tells us that if we slip into this area, we have a tendency to fill in this space. So we'll be watching the move. If the chart does not quickly recover off of any failed test of 116.50, it will slip down into these tighter congestion zones, and then it's got a monster gap, right, with no price action forward. All the price action in this gap is backward, and so it is a space that the chart could easily collapse. Well, I'm not going to say easily. I'm saying it's a potential to occur, and so we have to watch it. What are we seeing? Negative slope in a positive environment. That means my pullbacks are going to be into support. I've got the same sort of thing sitting here in the 4-hour, but the 4-hour tells me, hey, listen, your best setups are going to be the bounces into resistance that give you another short. Almost every single chart we looked at today tells us that bounces are going to fade. That is what we are looking at overall today. And I think that is really how the market is going to end up holding up for us in the grand scheme of things. We're just going to see bounces that fade. This is a very, very messy space. And I do not like it from a probabilistic formation. It is very, very messy. Look at the double bottom there and the bounce off 2033 again. It's just going to be a region to really, really watch in general. All right. And that is the morning report.